The following program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit AbsoluteLoans.com or call 888-90-HOMES for cost information. You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome to The Money on 1150 AM KKNW, the Saturday, February 14th show. I am your host and mortgage expert, Tina Mitchell. It's a great day to talk money. That's why I'm here with you and what the show is all about. How to make money, save money, and build a better quality of life for you and your family. I am also spreading the love with you on today's Valentine's Day show. So happy Valentine's Day to all of you. Be great to your significant other because that's what today is all about. I'm here. If you're hearing your show at a different time or day, you're listening to a rebroadcast. You can always call into the show for questions at 1-855-400-1150 or online at themoneyhour.com. Again, that's 1-855-400-1150 or online at themoneyhour.com. And my lineup for studio today, Scott Estes with the Estes team. Private lender with short-term financing offer a lot of opportunity for purchasing real estate. Today we're going to discuss the benefits of buying at auction and other places that you might want to use short-term financing. Also in studio, Geoff Patrick with Sound Transit. Today you'll receive an update on completing current regional transit projects and the work getting underway to shape a Sound Transit 3 ballot measure. And last in studio, Scott Schaff with SW Group Credit Repair. Taking the first step to repair your credit will make a huge impact on your financial history and your life. Great information and great guest in studio today. For more information, call into the show. Again, the show number is 1-855-400-1150, 1-855-400-1150 or online at themoneyhour.com. And let's go ahead and start out with a little money chat.
Money.
Today I thought I'd talk about the opportunity in purchasing a second home. The real estate market is still very busy. Lots of buyers out there, not a lot of inventory, but you may not have a lot of inventory in the prime spots here in our local market. But what about a second home purchase? So today I want to talk about the benefits of purchasing a second home. Second home is a luxury that many people dream about. Owning a second home can also provide practical benefits for baby boomers who are considering downsizing, relocating, or a split living arrangement in retirement. Purchasing a second home before you retire can make sense. First, it's building equity in an alternative investment. Real estate has, and I feel will always be a safe investment. The market goes up and down, and we will hit another crash again because we repeat history. History always has a crash, or there's always a crash that comes up in the real estate market, but it always recovers. If we follow what we've done in the history of the real estate market, as long as you hold onto the real estate, you'll participate in the recovery. Reduce work-life stress. If you choose a second home that is an easy drive from your primary home, you now own an instant stress booster. You can spend weekends there on a whim. It provides immediate vacation experience. Just knowing that you have this option can make those stressful times at work a lot easier. And in Washington, we have a huge benefit because we have Eastern Washington. So just a few hour drive away during the winter. A lot more snow. Maybe you get snow when we're not getting snow in Seattle during the summer. A lot more sun, great golf, wine country, just so much opportunity. And again, to just get away from the crazy city life for some quiet time, just a few hours away. Another great benefit of second home, great holidays. Instead of paying for a family vacation, you can instead invest in an asset class that you actually enjoy with your family and is making you money while you're enjoying those family holidays. Provide a true family legacy. With part of the retirement planning, you may be thinking of leaving something behind for your children. Inherited money is nice, but could be soon spent and forgotten. A second home in a special location can be part of the sharing and family bonding experience, including your grandchildren. These family bonds can transform the second home into a family legacy that you can leave behind instead of the cash that could be spent quickly. And protecting family bonds when retiring, a tricky part of retirement is downsizing and trying to navigate the loss of an emotional attachment to a longtime family home. If you have purchased a second home as part of the plan to live there when you decide to retire, you can still have a piece of those family memories, and this will make the eventual downsizing and relocation event much less traumatic for you and for everyone that's involved. And tax benefit, we haven't talked about that. On top of your primary residence, you can write off the interest on a second home. You've got one second home. It could be an actual home or a boat, but in this situation, we're talking about buying real estate. Also, depending on how you use your second home, some of the capital gains have to be tax-free as well when you sell. You need to obviously talk to a professional tax advisor to find out how that's going to work out for your financing. So financing a second home, interest rates are the same as primary. You can do it as low as a 10% down payment. A lot of people think they need a 20% down for a second home purchase. You do not. No monthly mortgage insurance options are available by doing a buyout of mortgage insurance, which you've probably heard me talk about before during Money Chat, being that mortgage is my arena, if you listen to the show on a regular basis. And you do have to qualify for both payments because it's a second home purchase. Just a simple calculation that you can use if you're sitting there thinking, wow, this sounds like a really, really great plan. Eastern Washington, by the way, you can get some smoking deals. And I've had Denise Lonis has been in quite a few times, which her predictions are spot on with what she predicts through the real estate market. And her predictions for Eastern Washington are some huge appreciation. I won't go into her reasons. You can actually go to themoneyhour.com and search by Denise Lonis' name and get her podcast or her time that she's been spent on the show. But a simple calculation, $50 per 10,000. So for every $10,000 in a purchase price, give or take a good estimate, it's going to be $50 a month on the payment. And that's going to cover you for principal, interest, taxes, and insurance. So great opportunities for second home. And of course, if you need any assistance, please feel free to call me into the show at 1-855-400-1150. Again, that's 1-855-400-1150. And coming up next on the Money Hour, great real estate opportunities still to be had at auction, and a lot of other opportunities that you have where you need short-term financing. You may not be able to expect to get options from a traditional bank, but that's why I have Scott Estes here to talk about short-term financing right here in 1150 AM KKNW after this short break.
This is the story of Daniel, who was born 2 months early. He weighed 1 pound, 7 ounces. His lungs weren't ready. His heart wasn't ready. His brain wasn't ready. At the hospital, the nurses said Daniel was a fighter, and they would do all they could to help him. The doctor said even with the best care, Daniel may never walk. He may never see. He may never learn. Daniel's parents spent night after night at the hospital, watching his every breath, holding his tiny hands, and looking for signs that he was growing stronger. At home, his parents looked around Daniel's empty nursery, at the quiet toys and the still rocker, and they hoped that one day they could sit in that rocking chair and tell this story to their very healthy son. Daniel's is just one of the more than 500,000 stories of babies born prematurely last year, but there's hope for a happy ending. The March of Dimes is funding the research and programs to stop premature birth. You can help bring more babies home healthy. Learn how at marchofdimes.com. Working together for stronger, healthier babies.
Mortgage fraud has been rampant since 2007. Many folks don't know they have legal rights. Find out if your mortgage loan has wrongdoings and fraud. Magnum Law Group will do a free audit of your loan documents. Facing foreclosure? Need to stop a foreclosure sale? Magnum Law Group can help. We have experts with valuable knowledge, and we get results. Have you decided to short sale your property instead of a foreclosure? Magnum Law Group has the experience to negotiate better and faster for you.
Hi, this is Deborah with Magnum Law Group. Please contact us at 425-454-4300. You can visit our website at www.magnumlawgroup.com or call us at 425-454-4300.
This is the Money Hour
with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, February 14th show. Happy Valentine's Day. I'm here to help build a strong financial blueprint 1 week and one show at a time. If you're hearing my show at a different time or day, you're listening to a rebroadcast, but you can always call into the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And in studio right now, Scott Estes with the Estes team. Great opportunity. Sometimes take a little creative thinking, and buying at auction is one of those times. Short-term financing allows you not to have to tie up your own cash, but to leverage someone else's. Scott, thank you so much for coming back into studio. Great to see you.
Thanks for having me. Always a privilege and honor.
And it's always a privilege for my listeners to hear what's happening in your arena, because I think a lot of people forget or don't think that short-term financing is even an option. So a little background about Scott. Scott is a private money expert with the Estes team. They are a full-service real estate lending partner that lends private money for opportunistic investors in single-family residence and commercial properties in the Greater Puget Sound Area. They help investors get in front of an opportunity and offer unparalleled service from start to finish. If you're a real estate investor buying a property off of the MLS at the auction, needing to bridge loan, refinance, or want their all-in-one fix and flip loan, you can't afford not to talk to Scott and his team. So Scott, excited to have a conversation with you here today. And let's go ahead and start at the show and explain to my listeners what private money is all about.
That's a great question. Private money is simply just that. It's private. There's multiple streams of, there's different pools of money all over the place. I have investors that are just individuals that like lending.
Okay.
I have hedge funds that are in this area that also have different appetites for different investor needs.
Okay.
Right? And so I get to shop all of them and determine which company is best given that client's scenario.
So you're a broker.
Correct.
Broker shopping out to find the best option. So tell my listeners, Scott, on who this would benefit. Who does short-term financing benefit, and who might need your services?
Anybody that's investing in real estate should know how private money works.
Mm-hmm.
It's a different beast than conventional lending. And in conventional lending, you've got your own set of hurdles. They'll look at the borrower's creditworthiness as a bigger factor than the collateral, than the exit strategy and what they're actually doing. And so in my eyes, I think I work with a lot of lenders. I work with a lot of real estate agents. I work with real estate attorneys. I work with a lot of investors that are fixing and flipping or buying at the auctions, or there's a number of, even commercial loans for people looking to purchase and become an all-cash buyer.
Got it. And so, as I mentioned before when we started the segment, it's really about not using their money, because you may have money, but why use your money, leverage someone else's money, correct?
Absolutely. You'll find that using private money, initial shock is, when you hear 2 points, 12% interest, a lot of people freak out when looking at it compared to a conventional loan, but the strategies are often so much different in a conventional world. And if I'm going to look at holding a property, then absolutely I would look at, conventional financing.
Of course.
But if I'm going to fix and flip this as fast as possible, or let's just say at an auction, you can't get conventional financing. So right off the bat, you have to come with cash, and that's something that I'll help do. I can help with the initial acquisition costs. I can also work in the remodel costs if you're going to flip it. And you might only need to come with 15 to 25% of that whole number, as opposed to in conventional lending, they would require 25% of the purchase, and then you would also need your PITI requirements for reserves, and you'd also then need to have the ability of doing the remodel on your own too. And that, for some people, it just doesn't pencil out as good as just using my money. I'm maybe a couple of days to close.
Sure.
You can get in and out of it before they've even processed your application in a conventional loan.
And a lot of times you're doing something with that property, or you're buying multiple properties, or you've got the ability to buy multiple properties at the same time. Absolutely. So let's talk about that, Scott, the cost, Scott, because at the higher risk, obviously there is an additional cost, and it's higher than what you pay for traditional, just as you said. So can you break that down for my listeners?
As far as, I think speed is your friend in private money. The faster you can get out of it, the cheaper it is. So when we first talk, we're going to need to figure out what you're going to do, how long you need, and then what your exit strategy is. And then at that point, I would either work with them on getting them a conventional loan to take it out.
Okay.
If they're going to hold on to a property, as far as costs go, I'm kind of like valet, right? Is the best way to explain it is that there's times where I can afford to drive around the mall and wait. But around the holidays when I just want in and out as fast as possible, sometimes paying a few dollars for that luxury is worth it.
Of course.
And my clients...
I'd always do that when I go to Bell Square during the holidays.
Right. Because you just want in and out, and I want it to be as efficient as possible.
Of course.
And so when buying a property, if there's a lot of people circling that property and they're all making these conventional offers, when I make my buyer a cash buyer, and I'm going to close in 7 days or sooner, and they can waive their financing contingencies, oftentimes we win that deal, and that's again where we're helping our investors get deals.
Of course, and that's a great point, Scott. Is just in a traditional out there and these multiple offers in our market, it's just really crazy, and a lot of people they're just they're feeling like they want to give up because, and I don't think it's going to get any better. Our inventory is not. We're not seeing more inventory, so interesting times in that arena. Let's talk about if a listener is thinking this might be something that they're interested in. What is their first step, Scott, to get this process started, or at least research it?
We would have a conversation. I got to figure out, if I'm the right fit for them, because oftentimes I might not be. They might really need to talk to you as a conventional lender. There's other times where I am the right fit, and I only work with people I like, love, and trust. And again, we...
and you like, love, and trust me.
Absolutely. That's why I'm here. I'm so honored. And I have helped some of your listeners, actually, that have written some amazing things. They've worked with other private money lenders, and they didn't realize how amazing we were, and at the same time, how inexpensive we were. Right?
Yes.
They were paying way much more for guys that are kind of sharks. And so we, we're really their real estate lending partner and can give it a personal touch. And, with 14 years of lending experience, I make a very good phone a friend, and so I can instantly, get somebody like you on the phone to figure out a strategy that's best. It's not a one-stop shop, and so that's where, again, if you're an investor looking at buying investment properties, having a private money lender on your side like me, I think it makes it just a different outcome.
And a piece of that team that you definitely need. Now, you talked a little bit about the time process. So your traditional close period from the time that, let's say that they make an offer on a property and it gets accepted, or they go to the auction house and they need that. What is that time frame?
I'd say give me, 2 weeks is basically what it is. So if we were to find a property and you've, at that point gone through the pre-approval, and again, I'm not looking at your credit as much as I'm looking at the collateral and the exit strategy. So somebody
a little
with
bit different than the traditional.
Yeah, right. If you've got a listener right now, wishing they could get in the arena of investing, and they have a 500 credit score, if they have, 25% down in a great property, I would love to talk to them.
So it's more lending on the property than it is the actual borrower,
collateral.
Because that is the collateral. And
Exactly.
so if anything happens and they do default, you're going to take the property. So you're looking at that investment on the property side.
Correct.
Not to say that that's what you want to do, but that's
Never.
it's we always want to make sense. And why is this? Why are they lending? Well, that's why. As far as your location and the areas that you service, Scott, what are those?
I'm mainly in King, Pierce, and Snohomish County. We've got guys at all the auctions. We also, again, I work with a lot of real estate agents and lenders, and I'm shocked as I travel around and meet all the different agents and lenders at the companies. I'm surprised that maybe 1 out of 20 actually know how private money works.
Yes.
So a lot of your listeners just assume mortgage lenders know how private money works, and it's not the case. They have no idea, and they're actually kind of baffled too, just like your listeners.
Yes. So what about the difference between, you mentioned commercial property versus just your traditional residential? What's the difference between commercial property, short-term financing versus traditional
the size of the loan.
Okay.
The size of the loan.
But really nothing.
It's not. Yeah, it's the same thing. For conventional, for a residential, whether you're going to do a single family, a multifamily, doesn't make a difference. It's still collateral based.
Okay.
If you're going to do a commercial loan, then same thing. I'm looking at your rent rolls, your the property, the collateral, what you want to do, and then what the exit strategy is.
Okay. So any tips that you have, Scott, who would this not be right for? Let's say they can't get traditional financing, so this is an option. Maybe it's the only option, but who would you say, you know what, I really just don't think the short-term financing is an option for you?
Anybody
I'll give you the loan, but it's not the right one for you. Who would that be?
It would be a person trying to do an owner-occupied loan of any fashion. Like this money is only for investment purposes.
Okay.
So, that's the biggie. If somebody had a foreclosure or a short sale a year and a half ago and they want back in, to buy a home, I'm not that solution.
Got it. Okay. And that's great to know, Scott. So give a success story. My listeners always like to hear stories. It kind of, brings things to a little more of a reality. So what's a recent story that you have to share of success in using short-term financing?
One's here in Bellevue for a condominium where a guy, he's looking in the $3 to $4 million range for some apartment complexes, and he kept getting beat out. He's getting a traditional bank loan, and he kept getting beat out by hard money, by all cash offers. And so we talked, and it was definitely, a no-brainer when you look at the ROI of buying a property using my money to get in the door. We were able to secure the next transaction that he went after, and that was a huge win for him.
Awesome.
On another side, on the residential side, we were able to buy a house, for $130,000, lend $30,000 into the remodel costs, and they were able to come with just 20% of that number. And at the end of the day, they just sold it for I think it was $275,000.
Wow. So there's some great opportunity, and you're there in some fashion as well to help in looking at those numbers and whether that particular property is a good investment for them. Correct?
Absolutely, it's a must. Yeah, we're in it from beginning to end the entire way.
Yep. So what about paperwork that they should start preparing, Scott, if they think that they want to take that next step?
If they're going to just apply, it's a really easy application. It's nothing like, the conventional lending. Okay. It's really, I just need to get an idea.
Your job's a little bit easier than mine.
It's way easier, yeah. It's an easy application. I've got to figure out what they've got, and then at that point, we'll pull credit, and that's about it for the credit side.
Okay.
I need to figure out where their money's coming from, and then if they're going to fix and flip, we just need to figure out what it is they're going to do to this property. If they've got an idea, they found a property for $150,000 and it needs a $50,000 remodel, what's that $50,000 going to? So have a good cost breakdown, itemize where those things are going to, and then have be able to present that to us so we can look at it all at once.
Awesome. So I have a listener that wants to talk with you. Scott, how do they reach you?
425-891-8260. Again, it's 425-891-8260.
And it doesn't cost anything to have a free consult with Scott, and it actually could cost you a lot if you don't talk with him before you look into this arena. Again, if you didn't get that number, you can call into the show, 1-855-400-1150, 1-855-400-1150, or online at themoneyhour.com. And if you type in Scott's name, you'll pull up all the podcasts because he's been in studio many times to share his wealth of information in this arena. Scott, thank you so much for coming back in studio. Always a pleasure.
Thank you. Happy Valentine's Day.
And coming up next in the Money Hour, development around transit can boost ridership and make neighborhoods better places to spend our time. Geoff Patrick with Sound Transit here to share what's coming up in the future right here on 1150 AM KKNW after the short break.
The thought of my sons growing up without me inspired me to quit smoking.
I talked to my doctors, and then I threw away all my cigarettes, ashtrays, and lighters.
I started exercising instead of smoking.
Getting support from friends online kept me on track.
Staying away from alcohol when I was first quitting was key.
Instead of smoking after I ate, I'd get up and take a walk.
I missed having a cigarette in my hand, so I'd hold a pen or a straw, anything.
Until I knew I wouldn't give in to temptation, I spent more time with my friends who didn't smoke.
I went to places that were smoke-free.
I didn't stay quit the very first time I tried.
I kept on trying, and I learned something each time.
Do whatever it takes.
No matter how many times it takes.
I quit.
I quit.
I quit.
We did it, so can you.
You can quit. For free help, call 1-800-QUIT-NOW. A message from the U.S. Department of Health and Human Services and CDC.
Mortgage fraud has been rampant since 2007. Many folks don't know they have legal rights. Find out if your mortgage loan has wrongdoings and fraud. Magnum Law Group will do a free audit of your loan documents. Facing foreclosure? Need to stop a foreclosure sale? Magnum Law Group can help. We have experts with valuable knowledge, and we get results. Have you decided to short sale your property instead of a foreclosure? Magnum Law Group has the experience to negotiate better and faster for you.
Hi, this is Deborah with Magnum Law Group. Please contact us at 425-454-4300. You can visit our website at www.magnumlawgroup.com or call us at 425-454-4300.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour. This is your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, February 14th show. I am here to help you build a strong financial blueprint 1 week and one show at a time. If you're hearing my show at a different time or day, you're listening to a rebroadcast. To talk with any of the guests that I have in the studio, you can call into the show at 1-855-400-1150 or online at themoneyhour.com. And in studio right now, Geoff Patrick with Sound Transit, here to share with us the updates on completing current regional transit projects and the work getting underway to shape a Sound Transit 3 ballot measure. It's always a pleasure to have you here. It's been a few times that you've came into studio and shared your information about what's happening at Sound Transit. And just thank you so much, Geoff, for spending time with me and sharing with my listeners.
Thanks for having me back.
And background on Geoff Patrick is Media Relations and Public Information Manager at Sound Transit, which serves the more than 40% of Washington's residents who live in Central Puget Sound region. Sound Transit's express buses, commuter trains, and expanding light rail systems are playing an increasingly crucial role in the region's transportation network. By 2023, Sound Transit is on target to deliver 34 miles of light rail expansions to form a 50-mile system that will significantly expand the capacity of some of the region's most congested transportation corridors, with the region's population projected to rise 30% by 2040. Patrick is responsible for promoting the public's involvement in shaping where the future ballot measures should further expand transit after current projects are completed in 2023. And 2023 sounds like a long ways away, but it really isn't. It's kind of just coming around the corner, and lots of things to decide on what's going to happen over in your arena. So let's talk, where is Sound Transit in completing the light rail extensions, Geoff?
Well, as you just mentioned in your overview, we are on track to complete the projects in 2023 as voters approved in 2008. There's a lot of work going on right now, and so at that horizon of 2023, we'll have light rail between Seattle and Linwood. We'll have it operating between Seattle, Mercer Island, Bellevue, and the Overlake area of Redmond, and we'll also have it down to the Kent, Des Moines area in South King County. In the interim, there'll be some milestones opening different segments, and we're really excited about the next one to open, which is in early 2016, 6 to 9 months early. We're set to open the University Link light rail extension, which will go to entirely underground subway line going north from downtown Seattle to Capitol Hill and the University of Washington. And we're on track to complete that $150 million under budget. So it's
wow, that's exciting. By 2016.
Yep.
Yeah, and it's great in my arena. I mean, I do the lending side of it, but obviously in helping people secure mortgages for residential real estate, and just the opportunity for people to commute and get around easier is going to be a really great boost for our economy. Not that we need it in the real estate market right now, but never enough, right?
Right.
And so let's talk, what about the people? How many people are going to be riding light rail, Geoff?
Well, today we've got around 33,000 riders each weekday, and that's going to ramp up over time as we complete more projects. Later in 2016, we do have another project opening down to one stop further south from the airport, and we'll get to Northgate in 2020. And, so what we'll see is a gradual, or in some cases perhaps not gradual, increase in the amount of riders we serve, up to a projected 280,000 riders each weekday in 2030. So that'll be very welcome as our region's population keeps growing. As you mentioned, 30% more people by 2040. That means a lot more people trying to travel and a lot more congestion, and light rail is going to be there to get people around without congestion, and every person who rides light rail is somebody who's not going to be adding to the congestion in the roads.
Exactly. And so we talked a little bit about the real estate and how it helps. What does this really mean for our economy, the businesses, overall our real estate, Geoff?
Well, I think it's any region is attractive or not attractive to residents and businesses based on how well people can get around. And if people and if freight can't move, that's a major disincentive. It's companies really look to mobility when they decide where to locate and invest in an expansion. And so having a functional transportation system means access to better jobs. And so that ripples throughout the economy. So that's why there's so much. It's one of the reasons why there's so much interest here and on options for making things better as our population keeps going up.
And on the real estate side, I mean, there's a lot, especially in the first-time home buyer market, or people that lost their homes and were affected in the meltdown, not in a position to be able to get back in the market because where they're working, real estate is just too expensive. So this gives the ability to be able to work farther away, live farther away, and be able to get into real estate with better transportation.
That's exactly right. It gives you more options. Those options include living further out, as you said. Also, what you see is that around the country, around the world, that rail transit investments play a role in spurring vibrant, positive urban development. Density with it's a lot of people now are looking to that place where they don't have any yard work, they don't have a long commute, they can be in a dense area with great restaurants, entertainment, destinations all around. So light rail will play a role in that too.
And I have had representation to see a presentation and what's happening with the visuals and a face-to-face, and unlike radio, we can't. But where would you encourage my listeners to go that they can, because it's really beautiful when you look at some of the pictures and the photographs of how this is going to look. So where do you post those?
Well, we got a lot of great stuff on our website, www.soundtransit.org, and so there's always great resources there. If you go to the place at the above right says About Sound Transit, you can get some good background. Or the great thing to do is just get out and take a joyride on light rail.
There you go. All right, so let's talk about Sound Transit has begun work to shape a Sound Transit 3 ballot measure for consideration next year. What will the package include?
Well, we're just in the process of looking at that. What would our package include? There's a huge amount of interest in further expansion and recognition that with the long lead times associated with any kind of major infrastructure development, you got to think about these questions, well out in advance. The projects we talk about for a 2016 ballot measure are projects that be coming online in the 2030 timeframe. So, and it's going to be a different picture than today, even worse than today when it comes to congestion. So, there's a lot of interest in the part of our board in what's shorthanded as the regional transit spine, trying to complete light rail all the way up to Everett, all the way down to Tacoma, all the way out to downtown Redmond, and also identifying some other corridors in the region that are particularly high demand and would be well served by rail in particular.
Got it. Okay. And what is the status of securing the additional revenue authority that is needed before voters can consider a measure?
Well, before we can have a ballot measure, the Washington State Legislature needs to give us the tools to do that. We, the local voters will have the final say on what we do and would be involved in shaping the measure. But right now, Sound Transit's seeking additional sales tax, property tax, and that authority from the state of Washington that would be a precursor to allowing voters to consider a measure.
Got it. And what are you hearing from the public, Geoff? Will people support more investments?
There's a lot of support for more investments. I guess one, probably the best example would be in December we did our latest survey checking voter opinion about expansion issues, reflected 70% support around the region. That includes Snohomish, King, Pierce counties, the whole area of more than 50 cities that these services operate. And in that area, 70% of voters voiced support for a hypothetical $15 billion 15-year package to expand rail in particular.
Okay.
So that's a fairly high level of support for that. There's a lot of pain out there. I mean, I can rattle a few statistics off at you, but just in the last 3 years alone, there's been a dramatic increase in travel delays. It now takes an average of 80 minutes to get between Everett and Seattle on I-5. You've got a really substantial increase just in a 3-year period. It's up like 10 minutes, and so that's time out of people's days, and there's a lot of pain in people's lives because it's not just that they have to allow more time because of uncertainty.
Yes.
The benefit of rail is how long it's going to take to get you there each time.
Yeah.
Whereas with traffic congestion, actually that 80-minute figure I gave you was the amount of time you have to allow to go between Seattle and Everett if you want to be on time 19 out of 20 times.
Yeah.
So.
And I have to say, if anybody on my team is late one time out of 20 times, it's too many. I mean, you can't get to your place of employment late, so leaving early and spending that much more time in that process. So, Geoff, what about the main arguments for a ballot measure? What are you hearing?
Well, I think it's that dynamic that we're talking about here, that we got to do something.
Yes.
There's more people coming, and the reality is that in many of the most congested areas, there are not that many options for providing additional transportation capacity. They're just not there. I mean, you think about many places you might drive, whether it's downtown Seattle or other urban areas. To add more lanes, you'd be talking about ripping out overchanges, or in some cases, biting into skyscrapers, there's just the dollar figures are tremendous. And when you talk about light rail, it's a pretty good value proposition because a single light rail line can move, over time, and as population grows, up to 12,000 people an hour in each direction. Where you look at a single lane of traffic, and in the best of conditions, it can carry like 2,000 cars an hour.
Okay.
But when things bog down in congestion, that hourly capacity drops down to 700 an hour. So,
oh my gosh.
It's just one of those realities that other regions have, encountered before us, that you can't. There's a point at which, especially in the most congested areas, that you can't really rely on roads to add that capacity that we need to sustain our economy and our quality of life.
Yes. So, Geoff, if I have if my listeners want to get involved, what can they do? As a wrap up here, give a call to action.
Well, on our in the coming months, Sound Transit's going to go out and have meetings around the region to identify the public's priorities and what should be a part of a Sound Transit 3 ballot measure. And it's going to be a great opportunity for people to weigh in on what they think. And there's always information on what we're doing at www.soundtransit.org.
Perfect.
And so it'll be a good opportunity for folks to help shape the future.
Wonderful. Geoff, thank you again so much for coming back in studio. It's always a pleasure to have you, and popular podcast when we share with all of our database and our client base. Definitely a popular repeat for people to hear. So thank you so much.
Thank you.
And coming up next in the Money Hour, have you had any credit challenges? Do you want to get approved for a loan, get better interest rates, or maybe get that job that you want? Your credit challenges may prevent from all of these happening. But today I can help you by listening in with my next guest, Scott Schaff with SWW Group Credit Repair, right here on 1150 AM KKNW after the short break.
Mortgage fraud has been rampant since 2007. Many folks don't know they have legal rights. Find out if your mortgage loan has wrongdoings and fraud. Magnum Law Group will do a free audit of your loan documents. Facing foreclosure? Need to stop a foreclosure sale? Magnum Law Group can help. We have experts with valuable knowledge, and we get results. Have you decided to short sale your property instead of a foreclosure? Magnum Law Group has the experience to negotiate better and faster for you.
Hi, this is Deborah with Magnum Law Group. Please contact us at 425-454-4300. You can visit our website at www.magnumlawgroup.com or call us at 425-454-4300.
Is bad credit holding you back from getting a loan? The credit experts at SW Group can help you get back on the right track. Their team of experts has helped hundreds of people across the country fix their credit and get approved for the home of their dreams. Take charge of your financial future today. Call Scott Schaff at 954-531-2153. Again, that's Scott Schaff at 954-531-2153.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, February 14th show. Happy Valentine's Day to all of my listeners. Each week I share expert advice and inside knowledge on how today's events in our local economy can affect your money. If you're hearing my show at a different time or day, you're listening to a rebroadcast, you can call into the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com to discuss anything regarding money with myself or any of the guests that I have in studio. And right now we have Scott Schaff with SW Group Credit Repair, making small changes on your credit report, and how you use the available credit lines can make a big difference in your credit scores. Scott, thank you so much for joining the show and sharing your wealth of information with my listeners.
It is great to be back, and happy Valentine's Day.
And a little bit about Scott. Scott is nationally recognized credit expert and president of SW Group, a private referral-based credit repair organization that works directly with lending banks across the country to assist consumers that have some credit challenges. And I just want to start out, Scott, because you and I just had a conversation not too long ago about one of my listeners and how you help, not mentioning any names, of course, but could you spit out those credit scores that we started with her and where she's at right now?
Sure, absolutely. With Experian, initially the score was a 600. We were able to raise that to a 779, which is a 179-point increase. Equifax went from a 625 to a 756, and TransUnion from a 647 to a 735. So we're looking at almost a 200-point score increase with that particular client.
So if you're listening right now, what that means is the difference between her not being able to approve for a home mortgage to her being able to approve for a home mortgage with the best interest rates and the lowest cost possible. I mean, and this, Scott, the time frame that it took for you to take care of my client was how long?
It was a little over 30 days.
Pretty exciting stuff, and that's why I have Scott representing the credit repair here for the Money Hour. So, Scott, I just wanted to start out with that because I just think it's awesome, and there are so many success stories, but just having one recently and really sharing that with my listeners, because I think a lot of times people that have some credit challenges don't think that there's options to help them. They're stressed about it, and they don't even want to deal with it, or there might be some embarrassment. There's a lot of different reasons why people are not taking that step forward, and so that's why I wanted to kind of start with that. Make the phone call because it changes your life in every aspect when it comes to your credit. So, Scott, what is SW Group? Explain to my listeners who you are.
Sure. SW Group is a private referral-based credit repair organization. We work with mortgage companies primarily across the country and people that are interested in purchasing a home. However, they have certain challenges on their credit report that are preventing the bank from approving them. The banks then send them over to us, and we consult with the client. We go over the credit report, what are the negative items that are on it, and we're able to use federal law to issue disputes with the three major credit bureaus, and in a lot of cases get the items removed to be able to put the client in a position to get approval.
So, Scott, for anyone listening right now, why is it important for them to understand their credit score? How important is that?
Sure. Well, whether we like it or not, much of what goes on in our daily lives is monitored, collected, and sold such as our driving record, medical history, our internet traffic, but most importantly, our credit information.
Mm-hmm.
A mistake on your credit report can cost you a lot of money. It can increase your interest rates you pay on loans. It can prevent you from getting a mortgage or a car, getting a job, a security clearance, and it's not uncommon. A government study recently indicates that more than 40 million Americans have a mistake on their credit report, and 20 million have one that is significant. And a 60 Minutes investigation on the credit reporting industry has shown that these mistakes, on a lot of cases, can be nearly impossible to have removed.
Yes. And I read a statistics that 70% of consumers have things that are incorrect or their violation on their credit report. And Scott, Tell my listeners a little more about the credit reporting industry.
Sure. It's a $4 billion a year industry. It's dominated by three companies, Equifax, Experian, TransUnion, and they keep files on 20 million Americans, basically on the traffic on their financial reputations, and they make money gathering all that information and who we do business with. Then they sell it to banks, merchants, insurance companies, and employers, and then those people then use it to make judgments about our credit worthiness. An 8-year Federal Trade Commission study, the chairman of the FTC, John Leibowitz, is quoted as saying that we found some very troubling information. 1 in 5 Americans has an error on their credit report. It's a pretty high error rate. And the Ohio Attorney General, Mike DeWine, launched his own investigation and argues that it's the fault of the industry, which are clear violations of the Fair Credit Reporting Act, which states that you need to have a fair investigation. And unfortunately, the credit bureaus a lot of times really just do no investigation at all.
Yeah, and I think it's important that listeners understand too, we're not talking about necessarily a mistake, meaning that there's a late there that you didn't have, but also a violation in how it's getting reported on their credit report. It's out of violation and their protection. And so for that reason, it can ultimately possibly be completely deleted, correct?
Absolutely. Even if there is an item that, let's say, people say, well, I really didn't pay that item. A lot of times, collection companies are in violation because they don't have the necessary paperwork on hand to be able to legally place that item on your credit report.
As you always say, put the burden back on them.
Exactly.
And Scotty, you talked about the individual credit bureaus selling the information to lenders and then making the decision of whether they're going to get the loan. But also the credit bureaus are selling information to companies that want to, what they call trigger leads, and market to those people as well, which is kind of surprising. Most consumers don't know that the bureaus are making a lot of money and they're selling your information. To use an example for me, I don't buy trigger leads because I work strictly within a referral from my database and from my radio show. I'm not going out there and chasing clients. But in this environment, especially with the refinances going on, someone like myself could pay money for leads and information about consumers and what's on their credit report and then call and try to sell them a refinance. So, Scott, can you share with my listeners and how would they remove themselves so that they're protected from these trigger leads?
Sure. If you go to optoutprescreen.com, you can basically give yourself a 5-year opt-out request, and the credit bureaus will not be able to resell any of your information. They can't make any money off of you. And we use that as a tactic because if they can't make any money off of your data and we go and dispute items, they have less motivation to want to keep the item on the report.
Wow. That's good advice there, Scott. So what can my listeners do if there are negative items on their credit report? I know there's a lot they can do, but share a couple.
Sure, absolutely. If there are negative items that are on the report, you can issue disputes with the credit bureaus. It's a consumer's right to do it on their own. Absolutely, 100%. However, dealing with the credit bureaus, it's sort of like the Wizard of Oz hiding behind the curtain of their tactics and what they do. So if you're not familiar with the process, it can be very challenging on your own. So it's best to deal with a reputable company that you've seen positive past history, and have them issue the dispute to the credit bureaus to be able to deal with the items that are on the report, and in a lot of cases have them removed, and which can in turn raise your score.
And I would imagine too that there's going to be a little quicker response from the creditor side when they're getting a letter from representation from an expert credit company versus the consumer themselves as well.
Sure, it's a 30-day, by federal law, they have 30 days
Got it.
to reply.
So if you need any assistance there, you can call into the show at 1-855-400-1150. Again, 1-855-400-1150 or online at themoneyhour.com, and I will connect you with Scott. So what proactive steps can consumers take to improve their existing credit, Scott?
Number one, pay down your balances. That is by far the best thing that you can do. People think that if they spend money on their cards and pay it each month, it helps them. The less you use, the better off you are. There's what's called a utilization ratio. It is your total available credit that you have versus what your balances are. So if you have $10,000 combined on all your credit cards and you owe $3,000, your utilization ratio is 30%. You want to keep that as low as possible, and that will increase just by paying down your balances. Also, pay your bills on time. You know, that's the balances and the paying on time equates to a little over 60% of your total FICO score.
Yeah, and also talking with an expert before doing anything, because one of the myths out there is to close accounts you're not using. And you've said many times in studio, Scott, anything really over 2 years, it can be devastating to your credit score by closing accounts, because you can't get that back once you've closed that account out. And that represents how much the credit history represents how much of the pie chart there, Scott?
Yeah, and well, but real quick to touch on what you just mentioned, if you close that account, that available credit is going to drop your utilization ratio. It's going to affect that. If you have a zero balance, just leave it as a zero balance and let it stay there, and don't touch it.
Yep. So, can you tell my listeners about the new FICO score model and what this means for them?
Yes, FICO, the company that comes up with the scoring model, they came out with a new scoring model. It's FICO Score 9 model. It was introduced commercially in the fall of last year. Basically, what it is it's a new scoring system where unpaid medical bills will not be a factor, and if you have collection items that you pay, they will not be factored in as well. But there's kind of a catch to this. The credit card and auto industry may gravitate over to this a little bit quicker than the mortgage environment. Just because a new score model comes out doesn't mean that lenders will use it.
Yeah.
The last version, FICO 8, was released in 2008, and it has only been adapted by very few lenders. Right now, the majority of banks are using the FICO 4 model, and banks really tend to be very conservative with lending, especially for large loans like mortgages.
And, again, just explaining to my listeners, when you're getting out there and getting your credit report pulled on a soft pull, just checking directly through the bureaus or Credit Karma, you hear a lot on the commercials. That is not what your credit score is going to be when you're going in to apply for a mortgage. And it's really confusing to a consumer. Can you break that down and explain to my listeners why? Because it makes no sense. Why that would be. They think really that this is their credit score that's going to be used for qualifying for a mortgage.
Sure. The reports that you see on the consumer sites like Credit Karma, for example, or any of the other, there's a bunch of different websites you can go to pull your report. That is what is considered a business to consumer report. The report that banks pull are what's called a B2B, business to business report. And it uses different algorithms to populate the score. So there can be some differentials that are taking place with that. So people need to understand, if you go online to a consumer site, the account histories will generally be somewhat accurate. You're not going to be able to see date of last activity and certain other items. But the reports the banks pull are much more detailed.
Yeah.
And those are the ones that are going to be going off of an underwriting to get you approved for a loan, not a consumer report.
It would just be so much easier if a B2C did not have a credit score, because I tell you, that's the hardest one to explain and make sense out of. And that's really what the credit bureaus are all about, is making things confusing for the consumer. So it's very frustrating. So let's go ahead and wrap up our time together. There are a lot of myths. We've talked about a couple of them here. Most important myth that you want to share with my listeners today about credit scores?
Well, employers can see your credit scores. Employers cannot your credit scores. And what I mean by that is they cannot see the actual number, whether you have a 650, a 700. They can only see the account histories. They cannot see the actual scores. It's not available to them.
So, which is actually, it's a little kind of scary, but it is what it is, that an employer is going to see your activity and what you have, not seeing the score. I mean, it would be better that they could actually see the score and not anything else. You know, that seems a little backwards to me.
You know, I feel the same way on the issue, but right now that's the industry standard.
It is what it is, and there's nothing that you and I can do about it. Definitely, that's for sure. Well, Scott, thank you so much for talking with my listeners. As always, it's a pleasure to have you in studio, and a personal thank you to you for helping my clients and the listeners here of the Money Hour. It is greatly appreciated.
All right. Thank you, Tina.
This is your host and mortgage expert, Tina Mitchell, signing off for the day. My love comes your way this Valentine's Day. Enjoy the rest of your Saturday, and I look forward to talking money with you next Saturday right here on 1150 AM KKNW.
The preceding program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit absoluteloans.com or call 888-90-HOMES for cost information.